We'll keep it crisp. So maybe I think before we jump in, it's a very interesting topics about Africa, and we'll also touch upon the angle with India, since we are here at IBW. But maybe we can start with quick intros. Amar, why don't we start from you? Yeah.
Hi everyone, pleased to be here. My name's Amar. I lead venture investing and capital markets at the Algorand Foundation.
Hi, I'm Sitashwa. I'm the founder and CEO of Borderless. Brings is a project on the stablecoin remittance side for us. In the fiat world, we build a multi-currency deposit ecosystem, global investing, and remittances in the traditional side. But we're now getting into stablecoins and trying to bridge it between traditional finance and, crypto.
Hey everyone, I'm Shishir from Sorted Wallet. Sorted is the first crypto wallet for non-smartphone users, basically feature phones and low-powered smartphones. So we are essentially building first-time crypto access for millions across emerging markets through stablecoins and Bitcoin.
Hey, and I'm Amit. I'm one of the partners with Borderless. We have both a VC and a liquid strategy. On VC side, we have run a couple of Algorand-focused funds as well, and now we have a deep-in strategy and a cross-chain fund. And on the primarily early stage, and now launching a growth stage vehicle as well. And on the liquid side, we do liquid investments. So with that, let's jump in. Maybe, so idea is the panel, I think, represents a very good mix of, Amar, you from the infrastructure side, then from the user side, from the rail side. So I think it's a very good mix. Maybe Amar, starting from you, we know, compared to other L1s, Algorand has, kind of really focused on, for example, the partnership with Paycode for offline transactions. So what do you think is, specifically with the context of Africa, is the real killer DeFi app just transacting without the internet and, no other bells and whistles, or is there something else?
Yeah, as Amit mentioned, we focus a lot on payments, remittances, applications, and aid disbursement as well. And so what we found through our efforts with the likes of Hesab Pay, which is one of the leading aid disbursement platforms, distributing aid across Afghanistan, one of the sort of the biggest issues that we found there that is the biggest hurdle to adoption in the global south and bringing on board the sort of the underbanked and unbanked is not necessarily access to yield or just general sort of DeFi components within applications. It's more infrastructure-led and user experience-led, and that's sort of one of the big things that we found that we need to sort of overcome. And now, if you look in Africa, I think it's sort of 60% of commerce across the whole of Africa is done informally. And that's offline, and so sort of cash-based payments. And most people on a regular basis in Africa suffer from network outages as well. And so when we are looking to sort of push on-chain applications and on sort of digital value transfer on-chain, how can we achieve that when on-chain needs to be online at all times? And so the partnership that we have with Paycode is really interesting. What Paycode really enables is a user to have a card-based wallet or a mobile-based wallet where the cash balance is actually on the device. And so transactions can take place between all of us in this room, and all of us can be offline. Authorizations for those transactions can continue, but the actual settlement will happen on-chain once each device goes back online. And that's really interesting because now you can live in a world where there's a rural farmer in Kenya, for example, that can have some level of transactions that they can take place when there is limited connectivity. There can be a busy market in Uganda where a stall owner can accept payments from various parties when there's a choppy sort of data signal. But this is like really where I see real advancement and to really moving away from just cash-based transactions to truly digital transactions.
Awesome, awesome. Maybe moving to you, Shishir. So you have worked a lot on cross-border transactions, especially like through Stockall, allowing Indians to invest in US. So specifically in the African context, are things very different when we look at it from a B2B point of view versus investing, and whether are the real friction points?
Right. Yeah, given that we have had a background in capital markets, cross-border from India, um, honestly, the tech does not change too much. And also from an Africa perspective, the technology is the same. If it was India out, investing from India into global markets, then sending money from India for individuals versus sending money from India for businesses is a totally different ballgame. Regulation is very different. The way banks treat it is very different. The way the central bank looks at it is very different. But we don't see that in Africa. In Africa, we see a relatively homogeneous situation across most countries where sending money out is the same thing, whether it's an individual who's sending money out or whether it's a business. The difference, however, comes when it comes to volumes. The challenge with most African countries is that the availability of US dollar is obviously, as we have been discussing, it's, there's a great paucity of global currencies in Africa. That's why we're all here. Businesses tend to need larger volumes when it comes to remittances. But individuals can do even with small volumes, right? So the traditional ecosystem is to a certain extent able to fulfill the requirement of those individuals who actually at least are banked. It may be very expensive, it may be high friction, and like you just said, it's not on all the time, of course. But for businesses, it is 10x more difficult because they need larger volumes, and at larger volumes, the volatility can be just crazy because availability is even lower. So that's the challenge that we see in commerce, and obviously from a stablecoin perspective, I think there are some great solutions which are coming up, in Africa when it comes to businesses. Therefore, but we are also doing this for retail. So retail individuals from countries like Ghana, Nigeria, Kenya, etc., investing in international markets can do this with fiat. But we're also building products where you can actually buy fiat assets using stable coins from Africa. Right? So that's the difference.
Awesome. Shishir, moving to you, while again most wallets out there are fighting for iOS users versus Android users, Sorted has focused on KaiOS, So especially like in a country like in a region like Africa where data can be very prohibitive, until that is the case, do you think feature phones will actually, a $20 phone will actually beat having very smart features, or how do you see this playing out? Yeah?
I think there is no denying that smartphones will always be the mass market, and they'll probably bring more, volume in transactions. But we also can't ignore the fact that more than 50% of Africa still uses a feature phone. So we are practically talking about hundreds of million users that don't own a smartphone, that don't have any access to a crypto app or a crypto project at all, because every other wallet, every other exchange has just completely ignored this market because they don't feel that it is a market valuable enough, which actually is not true, because these are the people that really need these services the most. Like Amar mentioned that more than 60% of commerce is happening informally, and that's because these hundreds of millions of people have been ignored through and throughout. So it is a big market out there, and people we all live in a sort of a privileged world where we sort of don't realize the potential of this market. And coming to the point that you mentioned about data and the cost of data, it is a big pain point in Africa, because data is king there. Even 5 MB, 10 MB is a huge thing there, and that's why with Sorted, what we have done is we've tried to keep it our app as lightweight as possible. So we are very proud to say that we are the lightest crypto wallet app on the App Store at the moment. So just to sum it up, I would say that maybe the stablecoin revolution, the crypto revolution has started with the smartphone users, but definitely the feature phone users and the low-powered Androids will only amplify that going forward now.
Awesome. And maybe slightly shifting gears now to a more macro context about Africa. and how this plays in. So generally, again, kind of retail P2P has been a big push. I think we have seen a lot of even startups coming from there, providing off ramps, on ramps. Nigeria, Kenya seem to be the real drivers. More than 50% of the volume. But now there has been a big shift in volume coming from B2B. So do you think that the advent of stablecoin will actually push it towards bypassing the SWIFT altogether? So just like in India, we bypass the whole kind of landline and directly move to mobile phones. Do you see similar thing playing out in Africa where the entire SWIFT is bypassed and people move to trade, B2B trade via stablecoins? It's open for all, yeah.
Yeah, I mean, I think there's been some news in the last few weeks where there's some very influential people in the financial institution space that have said that the likes of SWIFT are rapidly being disrupted, and I think in Africa a lot of the businesses that are sort of SMEs in the space have a large exposure to FX. They can be import businesses that buy from abroad and sell locally, and they operate in an environment where, for a lot of them, access to FX is somewhat restricted, and then also the liquidity that's available is really shallow. So it's a really tricky environment. I have actually cousins in Tanzania who operate a large steel importing business, and they often have to scramble around for FX to be able to get US dollars to pay for the steel that they're buying from China in order to sell it locally, and they at worst can have a slippage of up to 10% on the Tanzanian shilling, or during these small FX windows that they have, they will probably end up trying to preload dollar value to their business partners across the globe, just so that they can take sort of charge of this FX opportunity. And so it's really tricky. And so now what we're starting to see, I think, through our efforts, is that there's an increasingly steady flow of on-chain sort of treasury functions. And so a lot of businesses now on the ground are starting to hold stablecoin balances on-chain for their cash flow purposes, and then only off-ramping into their local currency to pay for the wages of their staff or taxes. And so you see sort of these these sort of CFO functions or treasury functions really operating as their own sort of mini central banks. And they will start to generate yield on the positions that they have through sort of risk-free products. And they can plug into some of the infrastructure that we are onboarding at Algorand, like for example with Noah, where there's no real change to the payment infrastructure. Virtual IBANs, you pay to a virtual IBAN for whether it's to your importer or otherwise, and that automatically then gets on-ramped and sent to a wallet of choice. And so there's no real change for the treasury function, but it just enables them to have this liquidity. But I think the key thing here is that what we're starting to see is great, but we need to see some more consolidated liquidity of just sort of stablecoin balances as well from some of the PSPs and on and off ramping partners on the ground, and sort of banks as well in some of these markets. And we're starting to speak to some of these aggregators now that are aggregating liquidity as well. And the key thing here is that what this is really doing is sort of dollarizing a lot of the economies, which the local governments quite rightly are not looking at too fondly. And so it needs to be played in a sort of a smart, regulatory compliant way. So they're encouraging, like for example, in Nigeria, we're speaking with CNGN at the minute, where we are looking to onboard the local currency stablecoin as well, because that's the sort of the longer term sustainable way to continue and not push each economy to become completely dollarized as well. But be interested to hear your thoughts on it as well.
Yeah, no, I mean, I have an India lens to this as well. So, for example, Indian exports to Africa were about 31 billion about 6-7 years back, if I'm not mistaken. As of 2024, we were at around 43 billion. So there has been a substantial increase in just Indian exports to Africa. And one can imagine that, like Amar just said, most Indian businesses generating revenue from Africa would find it difficult to get the money out because liquidity is just very shallow. I think over a period of time, the right solutions will have to have regulatory compliance, but also, of course, solutions are obviously stablecoin dependent, and the right way to do that is to have like a multi-PSP ecosystem where you have liquidity all the time, and then you are able to get money out in a jiffy whenever you need it. What we see is that most businesses today, they wish to leave the Naira or the CD that they're earning for local expenses. They leave it locally, and they want to take out the profits or whatever they want to bring out from a Ghana or a Nigeria or a Tanzania, and bring that to a European destination or to their Indian treasury or wherever they want to manage that. But given the change in volume that has happened in the last 5-6 years, I'm sure just like India is we are north of $100 billion in trade overall, and like I said, about $40-45 billion is just exports to Africa. This trend is something that needs to be addressed, because the amount of money that is lost on local currency volatility is not funny. You lose 10% over a weekend sometimes, right? And obviously the spreads are also high. And many of these businesses may not be very high margin businesses to begin with. So you lose substantial bottom line, if, just because of the currency situation in Africa.
Anything to add?
I think I completely agree with what these both mentioned, because even in Sorted, what we are seeing is that many of our users, the biggest use case they're seeing is remittances. They have, even though they own a feature phone, they probably have a son or a daughter living abroad in London or in the US who tries to send them money back home, and having to to lose 10%, 12% on every transfer is a lot of money for them, especially coming from humble backgrounds. So it is a big use case that we are seeing as well, and I think it's only going to grow more with more awareness and more education. So I mean, being in the industry, we're all for it, and I think it will definitely keep growing as we go on.
Awesome. And maybe, I know we touched upon this point, Sitashwa, you touched upon that. Maybe this is a question more for Amar, you and Sitashwa. So about the dearth of dollars, right? Physical dollars, fiat dollars in African nations, and how banks don't have enough dollars for the trade. And so that's why that is kind of pushing a lot of B2B players in Africa to adopt stable coins. So do you see that B2B players in Africa basically digitally dollarizing their balance sheet, with stable coins over having fiat dollars?
So in my experience, businesses in Africa have been converting to crypto for a long time. Stablecoin is obviously just a much better way of doing it, or rather international businesses with presence in Africa, wherever it was possible for them, they were buying Bitcoin and Ethereum for a while. Right? Stablecoin gives them a much better avenue of keeping money in just much better treasury products, right? And they don't have to quickly off-ramp it, and it's a much better long-term solution for them. But certainly because liquidity is not there, dollar liquidity with banks is not there, and not, as a single business, you don't know enough PSPs to get the right rate at the right time. And in my experience, businesses are very, very aware of the potential volatility, especially over weekends and stuff like that. So you don't want to leave too much money there. Rather than buying Bitcoin or Ether, one might as well do a stable coin. And if there was a better way to do this in the future, such as having CBDCs which are much more, faster to exchange and so on. I think that's just the natural route to go, because then there will not be any more regulatory questions. Today, regulatory questions are there depending on which country you are operating in. So that homogeneity will happen as we go forward, maybe another 2 or 5 years.
Amar, anything to add to that?
Yeah, I think the stable coins aren't the sort of the silver bullet here. We're still going to have a situation where in countries such as Nigeria for sure, and Tanzania and sort of other East African countries, there is still a need for a consolidated liquidity pool for ultimately US dollar value and local currency value. And a lot of it at the moment is just fragmented in sort of siloed pools with sort of large banks on the ground, large regional banks, PSPs. And what that causes is ultimately like slippage across the board, because there just isn't enough liquidity to be able to handle large institutional flows where small transactions are tens of millions of dollars, and they can go in the multi-billions of dollars. And so when there is a corporate that needs access to $1 billion worth of liquidity in exchange for Tanzanian shillings, the big unlock will be where aggregated liquidity is sourced across various players, but that's something that is being worked on at the moment, and some exciting developments in the space.
Got it. And maybe Shishir, moving more from a user perspective, for remittances, both for retail and B2B. Like today it's easy to send 100 USDC from Mumbai to Lagos than to actually take it out and spend it, right? So, and that kind of contributes to that 10-12% remittance cost or the used transaction cost which you were mentioning. So do you see that continuing from a retail point of view? Do you think that money is just circulating in a closed loop where the prohibitive off-ramps are making it difficult for people to actually use it? And also from a B2B point of view, do you think that stable coins replace the traditional letter of credit which they currently have?
I think stablecoins will not replace any of the traditional financial services completely. What I feel is that they will become a natural bridge for people to let's say convert from stablecoins to UPI or to M-Pesa in Kenya, for example. Because what we know in India, UPI is great. UPI works amazingly well, but in the end, UPI still works only from an Indian bank to another Indian bank. Similarly, M-Pesa would only work for a Kenyan phone number to another Kenyan phone number. But when we want to send from an Indian bank account to a Kenyan bank account, we still need other services, other financial services. And in that case, that's where the cross-border transfer, the cross-border payments, that's where stablecoins sort of come in. And this is where we will see that the most growth will come in the next 2 to 3 years, that people will focus mainly on how can they off-ramp the stable coins into UPI or into M-Pesa. It's already available, but the rails definitely need to get a lot better. They still need to get a lot more efficient and reliable at 100% of times, because at the moment what even we see is that sometimes there are situations where people don't are not able to off-ramp immediately because of liquidity issues, because of provider issues. So I think that will all improve with time, but like just to sum it up, I think stablecoins will not replace any of this. It will rather complement them and make them better, because they will bring these different technologies that exist across different markets, let's say India and Kenya and other markets in Africa. They will bring them together and allow them to be working a lot more efficiently together.
Got it. And I know we are like coming to 5-minute marks, so maybe like one hot take from each of you. So Amar, maybe starting with you again. So specifically for Algorand, over the coming years, in the context of Africa and stablecoins, do you see most of the transactions volume coming from retail users using M-Pesa to transfer money, or do you see it mainly coming from banks, kind of adopting algo? Yeah.
I personally love and actively looking at investing in projects that we would sort of call remittances plays, so remittances ventures that are disrupting the likes of Remitly's of the world between corridors such as the US and Africa, and we're just about to onboard probably the largest remittances player between the US and India as well onto Algorand, and sort of, you know, crypto neobanks, super apps. I love it. Like, I think it's a great use case. I think it's a real sustainable use case where ultimately blockchain rails are sort of the infrastructure layer. But with that being said, I think for every $10 million worth of retail transaction volume that we see, we'll probably see $100 million worth of transaction volume, even just between one company with their sort of intra-office rebalancing that they do across the globe. Like, the volumes that we've seen between just the sort of companies as an internal function is huge. And so I think this is where B2B flows will really help to drive the liquidity and credibility over time, and we'll continue to see retail come on board, but at the moment it will really just be sort of the tip of the iceberg, I would say. And once that's settled, from a sort of an infrastructure perspective and liquidity perspective, but because of the sort of B2B flows, I think that's when we'll start to see retail flow come on at real scale, right? And retail will come in and they will bring in the depth, but also that sort of the network effects that you don't necessarily get with businesses. And I think we saw this in sort of the mobile banking days as well, where sort of wholesale flows came first, and then sort of retail came thereafter, and like, you know, similar to like M-Pesa and others. So yeah, first business and then sort of retail at scale.
Makes sense. Sitashwa, like moving to you, like MiCA really transformed the whole space, you know, with the regulatory overhaul, and so specifically in the context again of an African trader doing trade, you know, if the wallets start having KYC rules like MiCA, do you think that will really kill the market, or do you think that will be a good thing for the market? Yeah.
No, I don't think it will kill the market, honestly. I think sometimes what we miss is that the traditional or the fiat regulator is also trying to innovate. Right? So, for example, we just saw in the US that now you can trade commodity futures with stablecoin as margin. You can leverage your stablecoin and trade on CME, for instance, right? And of course, the regulation evolves. MiCA, you know, I think it will not really impact the unbanked to begin with. What's going to happen more likely is that people who wish to trade fiat assets with stable coins, they will see a bit of resistance initially, because so that's a bridge that we are trying to build, that you can trade Apple, Google, Tesla, etc. with your stable coin liquidity. Now, when we do KYC for that, today, depending upon our regulator of the execution venue, you know, we have to figure out, you know, what IDs to use, what address to use, what the KYC norms are. If MiCA coming in adds another layer of KYC, then there will be some friction in the flow. But I think even the Web2 regulator is keen on actually bringing this volume to the fiat world, as long as their KYC norms are satisfied. So they will, you know, they will probably have to deal with each other.
Makes sense. And Shishir, coming to you finally, like in India, you know, WhatsApp integrated payments, and that really changed the race between GPay and WhatsApp. So who do you think wins the kind of payments race? Is it like a crypto native app like Sorted, or is it like WhatsApp, OPay, integrating stablecoin payments?
I don't think that there will be a single player who takes everything. You know, it is a big market. Africa is a huge market. You know, I think what will happen in the end is that, you know, there will be room enough for, you know, crypto native app like Sorted, and then there will be bigger players like WhatsApp that will come in and sort of change the market. But what will happen with that is they will bring more awareness, more education, and that will actually help the apps like us, because people do need the education, and when a bigger player makes that change, makes that revolution, they really bring in a lot more use cases to us as well, because now people are like, okay, USDT, what is USDT, what is stablecoins, where can I access them more? And that will continue to happen when bigger players start innovating with stablecoins and blockchain. So I don't think that it is just one winner takes it all. There is enough market there for everyone to focus on specific corridors, specific user bases, and every platform will have its own market in the end, where they can focus and sort of relish at the end. So I think it's a big market, and everyone will probably be able to have a good share of it in the end.
Awesome, awesome. Thanks. I think we are on time as well. So, yeah. So, thanks again for your insights, and I think you're on for lunch after this. So, thanks again.
Thank you so much.
Thanks everyone.